Markets on CNBC Asia.
Welcome back to Asia Market Wrap. China's stock market regulatory body has decided to temporarily suspend all initial public offerings in China while it reformulates its rules for the launch of new offerings. The move comes after a flood of new share issues in China, and the market regulators are blaming those issues for helping pull down the Shanghai stock market. It's down by more than 25% since April. Under the new rules, the pricing of initial offerings will be more market-orientated. That means bidding by financial institutions will help to determine the price of the offer instead of the company deciding by itself. The regulators have been tight-lipped about details and a timetable for the changes. They say the rules are undergoing a consultation period right now and may be altered before they come into force. Let's get some insights on the new policy proposals from Philip Chan, who's Research Director with Shenwan Securities in Hong Kong. Philip, welcome back to the show. Good to see you again.
Hi.
Let's just talk about the situation there. I mean, this notion that somehow the Shanghai market's fall is to be blamed on the IPO market, is that necessarily particularly fair?
It's not. It's not fair because the Shanghai market and indeed both markets in China have been retreating for about 3 years now. And apart from a little blip up that we saw in the second half of last year, it's been downward most of that time. And that's been due to many reasons. One of the reasons in more recent months has been assigned to this new smaller enterprises market, which was launched back in June, and that's supposed to have taken some interest away from the Asia market in Shanghai.
All right,
but I think it's only one factor.
So having cleared that relationship up, let's acknowledge that there is some complaint about the state of the IPO market, and it seems that not many people think the way it operates right now is necessarily a particularly effective one. So tell us how it does operate right now. Who actually sets the pricing and on what basis?
No, the pricing is basically set by the CSRC. They may not actually state, you can only place or say issue new shares at that price, but they put a glass ceiling on the valuation. And the underwriters, they basically come to that kind of agreement with the underwriters. So the agreement is basically made really before even the market, or let's say fund managers get an idea of what kind of pricing it's going to be.
Right.
So in a way, that's why they're saying it's been, there's been collusion, or it's not been a transparent process.
So if the CSRC is the body behind that process, why on earth would they want to go around and change it? Obviously, they're the one in the driving seat, and they are deriving the benefit from it. So where is the impetus for change coming from?
The impetus of change is because they have to do something to change the perception of the market. Now there have been a lot of measures being announced over the last couple of years. One of this measure that they're announcing is positive for the market, but it's been talked about for quite some time. If the market sort of market perception of the exchange that it's becoming more transparent and rules are being more in line with, say, international practice, then it will be positive.
Okay,
but as I've said, it's
So the system that seems to be out there for consultation right now is that bidding from institutions is going to be accepted. How does that work? What do you think the new system is going to end up looking like?
It's going to be very much like the international practice. There'll be like a book building system where the institutions will indicate a range that they're prepared to pay for, say, a new issue. And the evaluation metrics will probably be based on forecasted numbers as opposed to historic valuations that a large number of the IPOs are set now in China. So it's going to be more in line with, say, international practice.
All right, Philip, we'll leave it there. Thanks very much indeed for coming by this afternoon. Philip Chan is with Shenwan Securities, joining us from our Hong Kong studio. Now let's move on to the picture in Japan. Industrial output numbers for the month.